I noticed something very interesting this week on QQQ, and it was that the really big moves didn't happen at market open. In fact, the big real moves happened around 10:15 and 10:30, so 45 minutes to an hour after market open. And that really caught my attention, mainly because most traders are focused on trading the first few minutes of market open, right? In my observation, I learned that the first 30 minutes of market open, at least this week, was mostly noise. And the real directional moves really started later in the morning. And in this video, I'm going to walk you through exactly what I saw in the charts on QQQ so you can also make your own conclusions. So I'm going to share my screen and I'm going to show you the patterns that I saw throughout this week. So we're not just going to look at one day. We're going to literally look at a few days this past week, and you'll see what I saw. And if you're an options trader and you trade QQQ, this might really be something that you might want to pay attention to, and it can potentially completely change your approach to market open. You see, the first 30 minutes of trading is usually the most volatile part of the day. And the reason is you have overnight orders that are being executed. You also have institutions who are now adjusting their positions based on maybe news, economic data, and reacting to all of that. And then you have retail traders that are also jumping in as they're seeing all of this momentum. So the first 30 minutes of trading are usually the most volatile. And what that does is it creates a lot of movement, but not necessarily a lot of clarity. And you're going to see that at market open, the market moves quickly in one direction, reverses, and then moves up again. It's really quite chaotic, and you're actually going to see this Friday how the market went up and down, up again within the first few minutes of market open. So let's dive into the charts and take a look at Monday, and then you'll see what I'm talking about. This is Monday, March 9th, and you can see this is before the market opened. So we're just going to go through the market structure before market open so you can see. So pre-market, what do you see? We went up, pulled back, went up, pulled back. And this is 9:15, 15 minutes before market open. So right now I'm on a 15-minute and I'm going to switch over to a 3-minute and get closer to market open and then see how the market open plays out. So now you can see this is 9:27, 3 minutes before market open. And as you can see, we've kind of like tightened up the range a little bit. And let's see what happens at market open. Okay, so let's take a look at it. So this is 9:27, market is about to open. So market opens, first minute goes up, and you can see we went up, first 3-minute candle, right? And then the second 9 minutes were going down, only for us to reverse a little bit and continue to go down. And right now, as you can look at the time, this is 9:48, okay? So we've gone up and down, up a little bit, down. So let's see if we're going to see continuation. And guess what? We go down, we go up again, really close to, the high for market open, and then we get slammed down. Now, the interesting thing is now, as you can see the time, it's after 10, right? Now you can see it's 10:09. And if you flip over, let's say to a higher time frame, like let's say a 5-minute, we can now start to see a little bit of market structure. So if you pay attention to this, you can see that, okay, this is our opening range high, and this is the low that we've set. So our current trading range right now is this particular trading range. Now, if we look into the previous market structure, right, we can see big bullish move to the upside. On a 5-minute, here's our demand zone, and I'm just going to delete this real quick. So now at 10:10, what you can start doing is you can say like, okay, we have a demand zone over here. Could this possibly then be a good place for you to probably take an entry for you to go up and target this high? And you can put your stop loss somewhere around here, right? So this could be a trading idea you could take, right? And this is 4x risk to reward ratio, so it's really, really solid. So let's see. So you can see, boom, price is now pretty much one directional after 10, right? So you can see 10:10, 10:15 normally is when I like to take my first trade, and I always share this in my community. So if I had taken this trade at 10:15 right here, you can see there's really no drawdown, right? When you look at it right now, there's really no drawdown into this area. It's just a nice clean move to the upside. So this was Monday. And you can see price kept on going up. Had you caught this all the way to this high, 4x, almost a 5x risk to reward ratio. But as you tried to trade market open, we went up, we pulled back, went up, pulled back, 10:15, one directional. So let's go to another day. So now this is Tuesday, right? So we saw what happened on Monday. This is Tuesday. So you can see this is 9:15. And the interesting thing is, similar type of setup as Monday, because we have this demand zone level right over here. We're about to open. So at market open, what do we see? Let's go down to a 5-minute. We can see price seems to be coming down. Let's press play. It goes up. You see, first 5-minute, we went up. We retraced the next minute, went up again, retraced. So you can kind of like see how price was essentially just moving sideways within this consolidation range within the opening 30 minutes of market, because this is 9:50, so it's only 20 minutes, and price has really just bounced up and down. It's literally just consolidated within this range. And let's see what happens. We eventually broke the consolidation support to the downside at 9:55, and then at 10 o'clock we entered the demand zone, right? And then at 10:15, that magical time I normally like to take my first trade, we see a move to the upside. And similar to what we did on Monday, you could then now look to take something like this. So let's see. And then now it's one directional to the upside, right? So all you had to do was be patient the first 30 minutes or so. Price drops into a demand zone, and then from the demand zone, nice clean move to the upside. And if you look at the risk to reward, similar to yesterday, 5x risk to reward ratio. So that would have been also another good trade. So back to back, Monday and Tuesday, same setup on QQQ. Be patient first 30 to 45 minutes, and then now you can take a one directional trade based on the market structure given. So now this is Wednesday. We have the demand zone from Tuesday that caused that move to the upside at 10:15 that we just saw. And right now at 9:15, price had touched that demand zone pre-market, and price is starting to move up. So at market open, one might think we're going to just continue going up, which could be very well the case. But remember, we could pull back or something can happen. And also, we shouldn't forget that this could potentially act as a supply zone. So let's just play it out and see what happens. So market opens, and take a look. We went up. Let's even go down to a lower time frame and see. So this is 9:30, right? So 9:30 we go up, we drop down, we go up again. So you can see up, down, up, right? And what time is it? 10 o'clock. 10 o'clock, we're in the supply zone. And in this case, because we're in the supply zone and we know that we have a demand zone to the downside, this could be your setup, essentially, that you're looking to take. So you could have taken a nice, good move to the downside over here. And you can see, boom, we end up hitting the demand zone. So it was now somewhat one directional after 10 o'clock, right? So that's something that's really, really interesting. You could have taken the trade over here, which would have still been a 4x risk to reward ratio. If you wanted to get the full TP, you can see another really strong move. But once we got to 10 o'clock, after the up and down and up, going to the supply zone, nice clean move to the downside. And that was Wednesday. So right now, 3 for 3, where if you're just patient and wait to take your trade after 10, you have a little bit more clarity about the direction where the trade is going to go. So now let's take a look at Thursday. So Thursday, you can see this is 9:15 right before market open. What we do see is we have liquidity sitting right here. And there's the expectation that price could potentially come, grab this liquidity and go back up. But we don't definitively know what price is going to be doing. We've been bullish. There's been a lot of stuff happening in the news with the war and all of that stuff and economic data. So let's flip over to a 5-minute and see what will happen. And again, liquidity and the demand zone sitting right here on the 5-minute. And then at market open, what do? We go up, we come down, right? So if you had traded market open at 9:30, yes, you could have been able to catch this move. But as you can see, 9:35 we come here, and then 9:40 major smackdown. But this is liquidity, right? So the expectation is price is going to pump up, right? So let's see what happens. It doesn't pump up. It continues to go down. So now we're at 9:50, 9:55, 10 a.m. So now at 10 a.m., we've moved back into this supply, and it looks like this supply is acting like a demand. But now you have at least some clarity as to what you could do. So because this demand zone got mitigated, we can take this off. And what you can then do is now you can look at it based on a bearish range Fib retracement. So the sentiment right now is you can take this as your trade, right? And then you can target this low, right? And what time is this? This is 10:10. So if you're taking a trade at 10:15, this is the setup that you're looking at because the market has given you structure. We went up at market open, massive sell-off to the downside. So just based on this massive sell-off to the downside and the pull back into this fib, there is the potential that now market makers are going to take it down. So this is your high probability setup. So let's take a look and see what happens on Thursday and take a look. Take a look at that, right? Nice and clean, right? Once you took it. So it would have been from the fib retracement, nice drop to your low. Again, 10:15 is when this drop happens. So that clearly shows the thesis that I'm talking about, that if you're just patient enough, first 30, 45 minutes, the market will give you structure that you can base off your trade. So far it's 444. And now let's take a look and see what happened on Friday. On Friday, as you can see, here's your 9 a.m. candle. The market has been kind of like going up. And, the day before, we had this major sell-off to the downside. So are we going to see continuation to the downside? We don't know. So let's pay attention and see what happens at market open. So we'll flip down to a 5-minute. And then we'll go to market open. So this is 9:25. So this is 9:30. Opening candle goes up. We retrace a little bit, but then it also goes up. I'm actually going to go to a 3-minute because you'll be able to see this even much more closer. So this is the 9:30 candle, right? 9:30 candle, we go up. 9:33, we sell off. 9:36, we go back up. So this is the market open volatility, right? Let's even go down to our time frame that I was talking about, that you want to stay away from, because you can see we open, right? Opening candle goes up. Next 1 minute we go down. I'll actually make this even bigger so that you guys can really see. So this is our opening candle. We go up. The next candle, and I'm on a 1 minute, by the way, we go back down. We retrace. We go down again. We go up. Massive resistance to go to here. And then you come up. As you can clearly see, the market hasn't really picked a direction. So if you're trading options, if you enter calls, you go long, and then the next minute you're down. And then the next minute you're up, you're down, you're up again. It can really drain you emotionally if you go through all of this. So we'll hop back over to the 5-minute. And right now we're at 9:35. And then you can see we break out of the consolidation range at 9:40. At 9:45, we drop back down. 9:50, we try to go back up. But 10 o'clock, we can kind of like see big resistance candle. 10:05, So this is the 10 o'clock candle. So 9:55, major pullback. 10 o'clock, we're also pulling back. Let's see what happens at around 10:15. So around 10:15, we're here. But guess what? The market has now given us structure that you can base a trade off of. So you can kind of like see, there's your trading range. And you can throw a fib retracement on this. So what you could be looking for here is for price to come into the fib retracement and then continue going down. So let's see if it'll play out. What happens? Look at the precision right there, right? There's your trading idea. And what time is this? 10:30, right? So on Friday, we had to be a little bit patient, but there's your trading idea, right? There's your trading idea. And then you can see price went all the way down. Now I'm going to show you something that's actually very, very interesting. In my trading community on Friday, before the market opened, you will see the setup that I shared in my trading community where we were talking exactly about this. And on the Zoom call, I even told my community, and for those of you guys in my community, make sure you confirm in the comments that I was telling the community to wait until 10:15 to take their trade. And this is the reason why. And you can see, pull back to the downside, fib retracement, major sell-off to the downside. So as you can see, March 13th, this is me, 9:24, right? 6 minutes before market opened with QQQ and SPX, the two setups that I looked at. And we're gonna look into the QQQ structure. So for QQQ, you can see we'd identified certain levels, but the thesis was price was going to come down to these levels, 597 and 592. These were the levels that we were talking about in the community. And essentially, the thesis was we're going to see price move up, and then it's going to drop. And you can even see I shared the same sentiment on SPX, where I was saying we're going to see price pump up, and then it's going to drop. And take a look, right? And this is now at 10:47 in the morning. Price went up and then it dropped. And guess where it dropped to? Towards the level that we had identified during the pre-market analysis. So instead of forcing a trade at 9:30, try waiting until around 10 a.m. before you make a trading decision. And when you do that, I want you to ask yourself three simple questions. So question number one is, what direction has the market actually chosen so far today? Number two, you want to identify where liquidity or key points of interest are sitting on the chart. Your supply zones, your demand zones, liquidity, fib retracements. And if you don't know these concepts, there's an application in the description where you can apply to join my mentorship community where I teach all of these concepts. So just click the link in the description to start the application process to join my mentorship. And then the third question you want to ask yourself is, what structure are we forming? And are we consolidating? Are we trending down? Are we going up? And based off of this, where could a good entry point be for me to take my trade? So if you've been trading market open and things haven't been working for you, where you haven't been consistently profitable, where you're able to take consistently winning trades, maybe by watching this video, I might shift your opinion for you to start looking for trades a little bit late, waiting the first 30 minutes of market open, being patient before you take a trade. And in our community, we spell patient as patience, right? Being patient to take your trade. And then when you see the market structure after about 15, 30 minutes of market structure, then take your trade a little bit more confidently. Now, every 2 weeks, I host a trading boot camp. And if you want to join the bootcamp, you're new to trading, you want to learn the skill, the link is also in the description for the bootcamp. So the bootcamp and the mentorship are two different things. The bootcamp, it's a 2-hour session where I go through some of these techniques and you can kind of like learn and sharpen up your trading skills. And then the mentorship, it's in depth. It's a 6-week program and there's more to it. So whichever one you're interested in, the bootcamp, the mentorship, or both of the links are in the description below. So I hope you learned something today, and I hope that you can backtest and validate my concepts. Everything that I share over here is for educational purposes. So make sure that you go into the charts, you backtest this information, and maybe you're gonna uncover and discover something that could actually help you become a consistently profitable trader. So anyway, I'll see you guys at the top. Take care.